Hello there, BoBo, the Bitcoin is back. I used to ask my banker friend, do you believe in Bitcoin? The answer is yes, we believe in blockchain. They don't give you a direct answer. So why don't you invest in Bitcoin then? The answer is we don't have the risk appetite. Fair enough. I fully understand that bankers are trained to respect risk management, especially with the client's money. It's a kind of play safe mentality. They maneuver within a certain range of risk, and to them, high return means high risk, which everybody knows, of course. But as a trained banker in finance, they should also be able to evaluate the low from the high. They should also be able to measure an asset by its time reference or preference. They should be able to rank an innovative asset by its real value. And most of all, they should understand a product thoroughly. By brushing off the Bitcoin potential from a single lens of risk appetite is doing a disservice to his or her client. In fact, it's their fiduciary duty to scout for the best investment opportunity for his or her client, right? Bankers today are pushing a lot of products to its client, right? Be it bond or trust or derivatives. Can they claim to know the product completely? No, right? Most of the time, they dare to market it simply because it's a safe product. Now, my question to them is, isn't Bitcoin a safe product by now? After surviving 15 years of robust acid test in the toughest financial environment. Throughout history, there was never a product that withstand all the challenges: evaluation, assessment, verification, provocation, confrontation, and validation from all the highly educated and professionals in the world, like professors, bankers, financial gurus, to lawyers and politicians, and all the wise men. Many of the professionals had understood and appreciate Bitcoin by now, but many still are die-hard, or what should I say, who opposed and are hostile to Bitcoin network for their own self-interest, I guess. All right, to protect themselves, they try every conceivable ways to put down the Bitcoin. Yet, Bitcoin is getting stronger by the day. Ultimately, their lain excuse is Bitcoin is used by criminals, drug traffickers, money laundering, tax avoidance, but they fail to substantiate or prove its case convincingly. The simple fact that Bitcoin is fully transparent, permanent, and all illegal activities is traceable is enough to prove them wrong. Bitcoin ledger can be traced as long as it is decentralized blockchain exists. All criminals' activities live on the blockchain forever. It can come back to haunt these criminals at any time. Criminals may escape today or tomorrow, but in months or years ahead, even 100 years, that criminal record can never be altered or erased. Which criminal want that? So my take is, they fail to understand Bitcoin network. There are so many positive to Bitcoin network, they fail to evaluate. Bitcoin is safe. Bitcoin is secure. It cannot be censored, sanctioned, confiscated, or banned. Cannot even be hacked. Do they measure the honesty of Bitcoin network that cannot be influenced and manipulated by third party, like what happened to a bank or a corporation or a government even? Where is their honesty and transparency? Bankers only believe in the blockchain features of Bitcoin network, but claim most banks are using blockchain today. But they don't, do they understand that only Bitcoin is decentralized? In other words, no one controls the blockchain. No one can tell the blockchain what to do. It's rule-based, hardwired into its core protocol. Whereas all banks' blockchain is centralized. In other words, CEO or board of directors can dictate what the blockchain ledger can or cannot register. Bank's blockchain is not transparent to the public. So the CEO and the board can alter or erase any ledger within the centralized blockchain at any time they did fit. Who the hell knows what is happening to the ledger in the bank's blockchain? Is bank centralized blockchain safe and secure? Now, having understood Bitcoin network, banker then should be able to evaluate the high and low risk of Bitcoin network. If Bitcoin can go to zero, it would have died long ago. After all the robust pragmatic acid test in the last 15 years, it proven Bitcoin can never go to zero anymore. So, if a product like Bitcoin has potential to grow 10 times, 100 times, or 1,000 times return, while the losing chance is only 10 to 50s, why not? Bitcoin is still very young. 3 to 5% world population adopted so far. So therefore, the light is still at the end of the tunnel. Its potential is still enormously significant. Do bankers measure that? Bitcoin also has low time preference. In other words, Bitcoin appreciates through time. It's a saving while the asset value appreciates with time. If only banker accept that Bitcoin has a finite supply of 21 million only, compared to any other product or commodity or fiat currency that has no limit. A simple demand over a supply, a short supply, is enough to see the asset appreciate over time. Banks don't like that. All right, because bank cannot leverage from the saving amount. Bank make money out of loans to customer from their saving. Given a fair playing field, Bitcoin security already trounced the existing monetary system in every features and aspect beyond imagination. Hope I paint the picture clear enough for our banking friends to think about. Thank you for watching. See you next time. Bye-bye.